Here we have the hourly price chart for Broadcom Incorporated, stock ticker AVGO. Here we can see that the stock is trading at a bit of a sideways consolidation range after experiencing some of the declines that were experienced throughout the technology space into the second half of last week. As we can see here, these declines really began after Broadcom reached highs of 1766 and then subsequently fell to new lows at roughly 116.68. And this really does kind of solidify our prior support zone here. As you can see, we can just kind of extend this line a bit, which was drawn previously for this chart. And we can see that share prices did manage to find support in this area. The reason that we were pointing to this price zone would be essentially there would be two reasons. One would be the fact that the stock really is trading into its 50% retracement of its dominant trending move in this area. And in addition to that, we're also seeing share prices fall back toward its 100-hour exponential moving average. That would be this rising purple line here. So to get the 50% retracement move, what we do here is we look for dominant highs and lows, which in this case would come in during the June 27th low, which posted at 1572.60. And then eventually rose to these highs just near 1765 per share. So that would be this price move here. We can look at the overall structure by using this white line here. This would be the actual the distance that prices traveled during that period of time. So as we can see here, prices are falling into this 50% retracement, which coincided nicely with the rising 100-hour exponential moving average. So this is why we were pointing to this level in advance. We were saying that if we did start to lose some support zones here, we would expect share prices to be caught by this 50% retracement, mostly due to the fact that there were kind of two combined signals falling into the same area here. So as we can see, this forecast here, this prediction did work out. It did come to be what actually happened with share prices. But it's important to note, what actually happened last week, because we're starting to see some interesting trading activity here within the tech space as a whole. On Thursday, there was a particularly negative bearish trading day where most of the market, to be honest, was declining. It would be possible to find some examples of stocks that were not falling victim to this trend. But for the most part, the S&P 500, the NASDAQ, and the Dow we're all being hit very hard by negative selling pressure. And this did weigh on most stocks in the market. You could argue that the tech space was really the biggest, victim of this downtrend, these downward price moves. Stocks like Nvidia, Meta Platforms, Apple, Tesla, a lot of these stocks saw significant declines in a very short period of time. And this would be when these declines would have occurred here for Broadcom. So as we can see, the declines were fairly minimal. We did fall from roughly 1766 to 1668. So roughly $100 in share price value. But we have started to recover here, and we have managed to find support in areas that would have been expected here. We were looking at this 50% retracement because it did coincide with this moving average, and it does look like this is working out fairly well in terms of generating support for the stock, for Broadcom stock. So going forward here, we do kind of have to take a step back a bit, try to look at the broader picture here, because there are some real questions at this point. There are a couple of different scenarios that could potentially play out here. Is this prior rally? Is this rally finished? Are we ready to start seeing lower highs? You can make that argument here because the prior highs came in at 1851. And the highs from this latest trading range came in at roughly 1770. So there's a fair amount of difference here. We've got about an $80 difference in share price highs. And you can start to make the argument that we're starting to see a succession of lower highs here. So this is really the question: Do you think that Broadcom is headed lower from here? Do you think that we've kind of posted the long-term highs at 1850, or do you believe that we're sort of basing here at these upper levels and ready to make another run higher? These are real questions. These are legitimate questions, given the fact that technology stocks have had such a tremendous run, and there are many people in the market that are currently arguing that many stocks are overvalued at this point. Overall, if we do look at the indicator reading, we do have a few different signals that are developing here. If we look at the trading activity that began roughly June 25th, we can see some upside trends in share price in share price momentum as measured by the relative strength index. But at the same time, we do see some conflicting signals here because when the stock became heavily oversold, this would have occurred from roughly June 12 to roughly about a week, roughly June 18, or a little bit after that. And we were trading in heavily overbought territory here. We were at the 90 level, which would be considered an extreme overbought condition for any asset. So we did start to see some declines after that. So it's not totally surprising given the fact that we were heavily overbought for such a long period of time. But the real question here is, where is the dominant trend? Can we rely more on this uptrend to the downside, or to the downside of this reading here, or should we place more credence or validity in this bearish trend up top? What we can say is that this longer term bearish trend has been in place longer, which does give it some added validity. And then in addition to that, we've got a little bit of a bearish trend within that trend, as we can see here. We can kind of zoom in here a bit. We can see that there's a sort of a mini trend that's kind of developing within this broader bear trend. So there are some real questions here, and there are kind of signals on both sides. And then we do have kind of a sideways trading range up here, and we do have a bit of a failure here to test the prior highs. In my view, I do think that we're currently basing here. I think that we're kind of basing at higher levels, and what I'm really looking at here is this higher low that was posted, relative to the share price levels that we're seeing toward the early parts of June, back here. And then we are seeing these higher lows that are more recently being posted at roughly 1670. So we've got a couple of signals here, and there are a couple of different arguments that can be made. And I would like to know what people think about this. I'm looking at this as a series of higher lows rather than a series of lower highs. Both of these things are occurring, but the real question here is, which one is more powerful? Which is the dominant trend here? In my view, I would currently side with the top side. I do think that we'll probably break out of this range at some point here relatively soon. The key answer to that question will come if we do see a break of 1770, and then to the downside, we would equally have an answer here if we saw a break of roughly 1670. So there's roughly the questionary period here would really come within this $100 range, in my opinion. So I would like to know what people think about this stock. Here's the current market analysis for Broadcom Incorporated, stock ticker AVGO.